recorded button. I'm going to split this up into 3 parts. That way I have, separate 3 20-minute clips. And for anyone that might have missed it or they want to catch up on the recording, there will be 3 parts to this. So we'll get started here. If you haven't downloaded the PDF, I would suggest you get that open. But if you're looking at the stream, I do have it up on my stream. So this is the free webinar I've been talking about for almost 2 weeks now. I said I was going to break down my daily trading strategy from A to Z and cover exactly what goes into building the watch list, what goes into finding the tickers, and how to execute on the tickers in terms of entry and exit, and along with some risk management. So I'm going to be covering all that sort of stuff here. And you guys can follow along on the PDF. If you have the tools to make some notes, I suggest you do make some notes. But this will be recorded, and like I said, I want to do more of these, get into more details, but I'll take it pretty basic just to give everyone a little experience here. So we'll get started. On to the second slide, what exactly we're going to cover. So we're going to be covering what makes a strategy consistent, right? What you can apply every single day in terms of having consistent results from it. We're going to be covering the strat. So I'm sure you guys have heard of the strat if you've been trading options for a while. The strat is it's not my strategy. It's a candlestick reading pattern strategy, which I apply my own, little twist to it. And that's basically what I'm using. So the main takeaway from the strat is going to be the inside and outside candles. That's exactly all you need to know. And I'm going to cover exactly what an outside bar is. I'm going to cover what an inside bar is and what makes them significant. So next up, we're going to be covering daily and weekly scanners. So if you've been in the Discord, we have scanners in the Discord. If you've never known how to use them efficiently, this will be your chance to take some learning in that. So, and how to build a watch list. So if you want to build a consistent watch list, we're going to take those scanner results and you're just going to put them into the watch list and you're going to get some results off of that. Risk management, we'll go over exactly why risk management is important in terms of this strategy, how it allows you to have a better risk management approach in terms of your trades. Sometimes you might notice, you can have a couple trades where you make maybe $1,000 on 2 separate trades, but then your one losing trade might take out, all your gains. So exactly how you can apply your risk management in terms of this trading pattern. And we'll also go over some entry and exit strategy with this. Last point I have on this is the time frames and market conditions. I'll explain some more about that when we get there. But for now, we'll just get started here. Moving on to the next slide here, if you're watching the stream, building a consistent strategy. So having a consistent day trading strategy is one of the most important parts of your day trading. You can't just be there clicking buttons all day long, expecting some consistent results, right? Like I just said, you might have some days where you make, some great amounts of profits, but when you're having those losses come in, they can be a little bit greater than your profits, which might, wipe out everything you've worked hard for. So having something consistent, something you can apply every single day, it's very important. You can't expect consistent results if you're not expecting or if you're not applying a consistent strategy, right? What I personally use is I couple up screeners and scanners along with candlestick readings. So like I just said, the strat, and I just form a consistent strategy using those. So applying it over and over again, every single day, the same exact thing. The reason I can call it a consistent watch list, you're going to find out in the next slide here after we cover the inside and outside bars. So in terms of the strat, like I said, it's just mainly built up of outside and inside candles. I have a visual here if you're following along on the PDF. So this is an inside bar right here. Basically just means that the candle is stuck within the previous candle's range. You can see right here, we did not break the previous candle's high or low, making it an inside bar. And vice versa, you have an outside bar, something that does take out the previous candle low and the high, right? So it's got to take out both for it to be counted as an outside bar. So this is the main takeaway from the strat. If you've heard of inside and outside bars, I mean, if you've been in the Discord, you definitely heard of it. But this is mainly the takeaway from inside and outside bars. You just want to know what an inside bar is, and you want to know what an outside bar is. So that is in the PDF. You can, always refer back to that. And there's a cheat sheet somewhere in there as well, where I'll get into that more details on that soon. So in terms of the screeners and scanners I'm talking about and using your resources, like I said, I use these, couple them up with the strat in terms of, the strategy I actually use. Coupling up these screeners allows me to break free from actually searching and hunting for these setups. I don't look for setups. They come to me in terms of using these scanners. So what you do is if you're in the Discord, you've probably seen it, the channel we have called Scanners. You just go into there. All these pictures are right from that channel. So these are actually the most recent results from the scanner. And you guys have access. If you're a premium member in the Discord, you have access to these for free. They are paid scanners, so if you want access, you would have to pay. But I post these on my Twitter every single day. I've been using them for the last 4 years, every single day I'm looking at these scanners. This is how I build my watch list. I don't, I don't go looking for the tickers, because sometimes what you'll notice is, I have some examples in this PDF, but sometimes what you notice is you're going to look for a falling wedge, going to look for some sort of option strategy play. You'll notice you're actually forcing the setup. There is no falling wedge, right? You're just kind of drawing something out of thin air. When you're looking at screeners and scanners, you're actually getting a result that's consistent every single week. It's just reading a candlestick pattern, close and open, high and low, and it's giving you the same exact results week over week. And that's what you can expect. You can expect some consistent results if you're using these scanners. So if you haven't used them yet, highly suggest you pull up these scanners and you start looking at them every single week. When the week ends, you can go and take a look at the inside weekly bars. You can expect them to move next week pretty aggressively because they've been consolidating for all week, right? Same thing with the daily. You're going to see the daily have a lot more than the weekly often. And whenever you have a daily inside bar, it's very key to keep it on watch for the next day. You will have a pretty explosive move off the open. And, it's some great stuff to keep an eye on. So I have some examples, like I said, we'll get into all that good stuff. Just kind of getting the basics out here. So building a consistent watch list. Like I said, we'll get into this point. So by using the scanner, you eliminate the process of forcing a setup, which isn't truly there, like I just said. So you're able to do your analysis during non-trading hours, and you can use the scanner and filter out, the best setups on the scanner. So you already have a scanner results that has some amazing setups. And if it's too much, you can go in there and filter it even better. You can even look for some better setups that apply, or something that you might like better in terms of a ticker, maybe volume, pattern, flow, etc. There's a whole bunch of stuff that you can add on to that to end. But getting your actual results from the scanner, it's going to be how you build your watch list. So it allows the setup to come to you without any hunting. You have to just look at the scanner. You don't have to dig through like hundreds of watch list tickers and look for falling wedges and all that stuff. You have simple scanners and indicators that just show you what there is. When your scanner filters setups, shows you exactly which candlestick pattern there is, and the results are very consistent week over week. So we have the 3-1 bars, we have the weekly hammers, shooters, and the inside bars, all that good stuff. So this is something you're able to call a consistent watch list. It's applying the same exact strategy over and over again, and it's giving you the same results. So that's what you're able to call a consistent watch list. And once you have a consistent watch list, you can expect some consistent results, right? Without that watch list, you're just kind of applying your strategy on different trades or different setups every single day. So here's an example I have. This is Airbnb on the weekly time frame. This is what I talked about in terms of looking for a setup, hunting for a setup, and forcing it. So that red zone you can see right there at the lows, that was the IPO low for Airbnb. Airbnb always traded above this level, right? Until that huge downside we had in the market around 2021 time, is when you kind of saw this huge fall on Airbnb. Price broke the IPO low, all-time lows, and we just came all the way down to the 90 price level. So every single week on the flow, or even just on Twitter sentiment, I could see people buying the dip on Airbnb, forcing this setup. They could say it's a falling wedge, they could say it's a double bottom, all that good stuff. And you start forcing these setups, expecting price to just go back to that retracement, which it eventually does, but how beneficial is that if you're trading options, right? You got to really pinpoint that entry point. And that's where the strat kind of comes in. So you can see week after week, there is no outside bar here, all until this week right here. We have a massive shooter down, and we have an outside bar, but the following week we just gap down again. So nothing actionable there until you start seeing that little cluster at the bottom. You can see we have an outside bar, right, which breaks the previous candle high and low. And then you have the inside bar. You actually have a double inside bar, which is pretty rare. It just means that there's more tight consolidation going on, giving you a better entry and explosive results. You can see right there, Airbnb stock went crazy off that falling wedge breakout. But just to kind of give you an understanding, that falling wedge I have on that chart, I could not see that falling wedge if I just looked at a naked chart, right? Once I start seeing that consolidation at the bottom, once the scanner starts picking up on the results from Airbnb, puts it onto the scanner week after week, it picks up my attention. I just go type in Airbnb, I look at it, I can see this consolidation, I can draw the falling wedge much easier. And there's even an inverse head and shoulders there if you look very closely. I didn't have it on a weekly, but it is marked out. If you take a look at it on the daily, you'll see it a lot better. But it was there. Very hard to see on the naked chart, but once you start seeing those candles forming up on the weekly, there's something going on. They're cooking something up. So you can see that's when you're able to mark it out. You can see this inverse head and shoulder. There's a falling wedge as well. So this is what I mean by hunting for setups. I don't want to force, calling it a falling wedge. I don't want to force calling it consolidation or inverse head and shoulders consolidation ready to break out. Just because, I'm not quite aware. Technicals could be very vague. It could be very, I guess you can call it just very debatable, right? You can say this is a rising wedge, you can say this is a falling wedge. It's very debatable between the trader, but when you're looking at candlesticks, it's very consistent. There's not much to debate. I can see there's a 3 bar, gets my attention. I pull up the chart. I can see the next week there's an expected inside bar. Because you saw the outside bar, you're going to expect an inside bar. And again, you have a second inside bar there, which is making price just very tight. And that's when you can start expecting some sort of explosive move off of there. So we have the falling wedge coming right down. And that's where you're going to start expecting your breakout from. So that is exactly where Airbnb broke out. It was a trade we took on the swing side. So I remember this trade. It was, I think it was last 2 years ago. And it was one of our most beautiful trades from 90 level or 92 level all the way up to the 110 plus. So beautiful swing on Airbnb. Took about 4 or 5 weeks of consolidation. You can see right there. And that's the most important thing about, trading options. Not every single week a stock is going to move, right? You have to go on the scanners. You got to figure out which one is consolidating, what exactly it is doing. And from there, you can start seeing what's going to move. So it's just basically everything I'm covering so far in terms of results from your scanner, building that consistent watch list, and then applying your strategy every single week onto the same exact, results. Hopefully that stuff's making sense to you guys so far. If you guys have any questions, make sure you guys drop them in the chats. I'll be more than happy to catch up with you guys. It's been a while since I've done one of these educational sessions in terms of webinars publicly with you guys. So, I'm just trying my best here, getting all the information out. I know a lot of you have been requesting this strategy breakdown, and I'm more than happy to share with you guys. Like I said in the beginning of this webinar, it's not going to take anything away from me. I'm not going to be losing money if I share this with you guys. It's just more for everyone. It's not going to be invalidated ever. As long as there's a candlestick reading, a candlestick forming in the market, the strategy is always going to be there, right? It's a candlestick pattern strategy or pattern reading that's been going on for years and years. So it's never going to go nowhere. And you can apply this on any single time frame. So I'll go more into the details on the time frame, like I said, at the end of the webinar. So managing your risk in terms of this strategy, having a consistent strategy allows you to have, much more better approach in terms of managing your risk. If you're just sitting there buying calls or buying puts all day, you won't exactly know exactly where to stop. You can have, of course, a 15% stop loss, 30% stop loss, whatever suits your, portfolio type. But honestly, I think percentage stop wise aren't the best approach to trading. Of course, if you have a limited amount of money and you're trying to take, a better approach in terms of that, having those 15% stops so you can keep your capital, of course that makes sense. But in terms of actual trading and actual managing your risk, I think it all relies on the levels, and that's why the strat is one of my favorite in terms of managing risk as well. It gives you a very consolidated range, and it gives you a very defined range as well. So you're looking at the weekly bars. Once you can see the bars, you know exactly what range you're playing between, where your stop needs to be. It's usually very tight stops, right? Which is why I really like this setup or strategy, sorry. So not having a consistent strategy, it means more than just being able to capitalize off the market movement, but you also have to safeguard against the potential losses, right? So just because you can have a strategy that can, make you money every time it says buy, you also have to have the strategy safeguard against, potential drawdowns like we talked about earlier. Your wins could be great, but your losses could come and wipe them out. So, which makes it another reason strat is one of my favorite strategies, like I just said. Let me see what I have here. So right, the strat it makes it my favorite because of the fact it is a consolidated form of trading. You can see just like the Airbnb chart we set up here, it is very consolidated before the move. You can see price is very volatile before this strat starts setting up. So before the strat, you can see very volatile price. If you entered longs anywhere there, you would be absolutely crushed, right? You would have literally 0% left on your trade. If you entered any longs here, it would be great. You're breaking that consolidation, and that's where you're supposed to be taking longs. But this is that consolidation period, which makes the risk management a very easy approach on this. So I'll move on here. Allowing your stop loss to be very limited within the consolidated range before the options spike up, preventing major losses. So you guys know when you're trading options, whenever things start to break out, you're going to start to see a major spike on option premiums, right? And even though the price can move not too much, it can move about 1% or so, you can see the options would be increasing very rapidly. And on the slightest pullback, when they start selling those options, you're going to see that hit your account, and you're going to see a much greater downside on that. So when you have the consolidated form of trading, as example here, when you're loading your position in that 90 to 97 range within that weekly candle, that's before the breakout happened. That's before everyone's buying these calls. There is flow buying calls, but it's not like rapidly increasing. And you can see that it's a much defined risk to reward strategy. So if you're taking the stop out of this, it's going to be before the breakout, allowing your contracts to not be spiked up and allowing you to have a better stop loss. If you're taking your entry or approach over here, your contracts are already spiked up, and on the slightest pullback, you'll be down more than 50% of your trade. And I don't know about you guys, but I wouldn't want to be down more than 50% of the trade on that small move up, right? So it's always good to have a consolidated form of trading. If you're taking your entries here, it's just much better in terms of risk management. So entry and exit plan. I know I said I'll touch on this. So here's the same graphic from earlier in terms of inside bar and outside bar. And I said this is all you really need to know in terms of entry and exit. So time is very important to every single person. I know some people are working 9 to 5. You don't have time to be staring at the chart all day long. You don't have time to be looking at every single candle that puts up in the market. So one of the reasons this strategy is one of my favorites is back when I started using it, I was actually in school, right? And it allows you to break free from staring at charts all day. You have other stuff to do. You can't stare at a chart all day long, right? So when you're reading these candlestick patterns, you can kind of predict what the next pattern is going to be. It's kind of like puzzle piecing, right? So you can see over here we have an outside bar. And whenever you have an outside bar, you can expect an inside bar. So whenever I try to share this with anyone, I try to think of it as an outside bar, think of it as a marathon run. You're running from one end of the range all the way to the other end, which is a marathon run, right? And whenever you have that run on price, you're going to expect some sort of consolidation. So just like after a marathon run, you need a little rest. Same way this outside bar goes from one end of the range to the other end. It's very unusual movement in the market. You can expect it to have a little rest, right? So that's where your inside bar comes in. So whenever you see an outside bar, you can expect price to be very volatile for that hour, but once, or whatever time frame you are, say we're on the hourly, for that hour, you can expect price to be very volatile, but once the hour closes, you can expect the next candle to be pinned within that hour range. What that means is when you have that marathon run, you're going to have that resting candle, and once both of them are closed, that's when you're going to have your directional point. So we'll get into some examples on that here as well. Actually, I'll just pull up this Airbnb right here. So you can see we have an outside bar, right? Whenever you see that outside bar, you're just chilling. Like, you're expecting an inside bar soon. You don't have to sit there and stare at that chart all day long. Next up, we have an inside bar. Just like we predicted, it closes within that range, right? So now, like I said, once both of them close, you want to wait until either side of that breaks. So if this broke the low, you would actually want to short this move. But I wouldn't be interested in shorting it because we have a few things. We have bullish divergence here. We have inverted shoulder. We have a falling wedge. And price is very extended from the IPO low. Like I said, that was my target. So I was looking for upside break, and you can see it never came. We had the marathon run where price ran from one end of the range to the other end, very unusual movement, and then you had the inside bar as well, and that's where you can see where we just kind of stalled out for 2 weeks. So 2 weeks, price moved between 90 and 97, another inside bar. So you don't take your entry until the inside bar breaks. Once that breaks, you can load onto your entry, and that's exactly where this thing started breaking out. If you want to take some swing starters, this is where you're starting to build your position when that inside bar is still forming within that consolidation. So we have a double inside bar, which is pretty rare on the weekly. And if you're looking for a breakout, if you know this thing's going to break out, you can start loading on some starter positions. And once this thing does start breaking out, that's when you're starting to look for adding and intraday movements. So like I said, time is very important to everyone. I know a lot of people work jobs. And if you're looking at something like this, where you can have a defined range, where you don't have to look at charts all day. And I'll look at some examples on the hourly for SPX and share those with you guys as well. So basically, you get to break free from looking at charts all day. And when you see that hourly candle forming or whatever time frame it is, you can kind of just give yourself a break. You can see how much time is left to that candle. Okay, I need to come back at 11:30. Candle's going to close. I expect the inside bar for the next hour. So when that closes at 11:30 to 12:30, you have another hour of free time where price is just going to stick within that range. You're not missing much. Yes, some people could be moving on the 5-minute time frame, 1-minute time frame, and they could be smashing trades within the hour. It has nothing to do with you, right? You're looking at the bigger time frame. You're looking at the hourly. You know that it's going to consolidate within that. And once that ends so you're going from 11:30, you're coming back. You see that outside bar close. From 11:30 to 12:30, you're going to see the next hourly candle close within that range. So from 12:30 to 1:30, which is going to be the break of that range, that's where you're going to be trading. So you have 2 hours of free time until you need to trade, right? And in that time when it breaks out of consolidation. Usually moves are very sharp, just like you can see here. We break this very tight consolidation. Price starts moving very rapidly and increases up to that price target. So if you are working and you're trying to trade at the same time, you come back at 12:30. You look at your trade, you look at the breakout, you look at your trade entry, exit, and you're done within, you know, less than an hour, because obviously on the hourly time frame, the next candle should be forming within an hour, and you're hitting your target, which I'll go back to in a second on that slide. So everything can happen within the span of 15-30 minutes, depending on the volume of the day, and that literally helps you break free from staring at charts for all day long, right? You don't have to stare at the chart for 7 hours. So we'll move on to the next slide here. Entry and exit. So exit plan, when you're looking at this inside bar consolidation and you take your entry, so for example here, you take your entry at the 97 level breakout, your targets are always going to be the previous candle highs, right? So over here we have equal highs. We're going to disregard that candle. You move on to the previous candle high, and you can see that is around the 108 level, and that's exactly where your first price target would be. And in order to keep continuing on these price targets, all you have to do is just keep looking at the previous targets or previous candle highs. So again, we have equal highs here. We'll ignore those, move on to the previous one, and you can see that's around the 125 level. And you can see we smashed out those targets as well before we saw any downside. So that's basically how you prepare your exits in terms of this. Of course, if price came down back through the 97, you would take the stop on this, but price never came back. It came back, retested it, and bounced right off the 97 level because it was a perfect weekly consolidation breakout, and we wanted to see continuation on price. So basically, to show you how you take your profits or how you take your targets on this, when you're using the strat, you just want to take the previous candle high and keep targeting that. If you're doing shorts, like I said, if you're shorting here, you would take the previous candle lows. So again, equal lows here, this would be your first target around, what is this, 88, 87. That would be your first target. And if you had any other candles here, you would just continue downwards, right? So this one was a breakout upside. We just take the previous candle highs, and you can keep using them as your targets. So we are at the 20 point mark. I'm going to stop this first recording.